What's up, everyone? Welcome back to the trading world. Guys, I want you to understand that trading is hard. Trading isn't easy, and it might look like everyone's making money on social media and everyone's successful at trading but you. But I want you to understand that the vast majority of traders, like 95 to 99% of traders, are unprofitable. That is how this game works. And it might seem like everyone is profitable. But you have to realize you could be in the top 10% of traders and you might still not be profitable, but you're in that top 10%. But you can't really see that because you really have to get to that top 5 to 1% to be really making consistent gains. And so it's really hard because on social media you see everyone else making money. And I just want you guys to understand you are way farther ahead in trading than you think you are. And anytime you feel doubt, I want you to just give yourself positive feedback, not negative feedback, because you're doing one of the hardest things in the world, and it's not meant to be easy. The people that are making money in this are making so much, they're making as much as the 95 to 99% of people that are losing. So, guys, don't let what you see on social media make you think that everyone's making money, because it is not like that. But with that out of the way, guys, I want to talk about first, we're going to get into the day. This was No News Monday, June 30th. We had a lot of choppy price action later in the afternoon, starting at around 10 o'clock. And once you get into this area, it's very hard to find opportunity. But we're going to be talking about stuff that you could have taken because even though this is bad price action, later on in the day, we end up getting this inversion. It kind of pops off the chart right here. You see this V-shaped inversion here. And it's tough because these trades are super lipo, but you have to wait through all of this to get to it. And Bob says it best. So I have a little tweet from Bob. Just felt like putting this here. Here you can see he marks out the inversion. It's inside a higher time frame gap. Clear draw on liquidity. Low resistance highs. He says, I did not take the setup, but I literally waited the whole day for this setup just for it to not give me a valid entry. Sure, the 3-minute did give us a valid entry, but it still closed inside the small 5-minute FVG. Stuff like these are reasons why trading can feel so hard. I understand why someone would over trade and start full porting over something like this, but I'm grateful every time I feel a sense of anger or FOMO, I just leave my desk. And dude, Bob is doing it exactly right, but it's so much easier said than done. And so this is one of those situations where the draw on liquidity overrides this tiny gap. At least that's, someone can let me know if you disagree, but I have a short form video on this a while back where it's like you need to think about the market in terms of liquidity, and if this inverse is really good with all this liquidity, you can anticipate this small gap to be broken. Normally you don't want to do that, but this 5-minute inversion has very good momentum, and it's very clear that we're ready to go run liquidity. But guys, I want to compare this. Oh, also we had SMT at the lows here. I want to compare this to the trade that I took, which wasn't as good, right? And it was this 5-minute inversion here to go target these highs. And so this inverses, and I enter right here, and I got stopped out right away. And the reason I like this is because we have SMT with this low, and we sweep out these lows here. And in hindsight, I actually won't take this again. And there's a good reason for it. There's a few good reasons for it. One, I want you to compare this inversion, compare visually like how it looks, whether it's ready to run liquidity versus this one, right? This one, it's a lot more momentous. Like you can clearly tell like this one means business, right? When you get this inversion like after aggressively sweeping out this low with SMT, it's a lot more obvious. I mean, this is just a huge momentum candle. It's a lot more obvious that we're going to go run through this entire rest of this consolidation. This inversion is a lot less convincing. Now, I know a lot of people still thought this was a good trade. But so that's only just the first reason. The second reason is if you go on the 15-minute time frame. So typically, if you guys don't know, you want to see the highest time frame gap inverse. And you can see that we didn't inverse this 15-minute. And I still took this anyways. I thought it was fine because I felt like this was such a good liquidity pool. We should at least go up to these highs. Clearly, I was wrong. And this is where we take a step back and we say, look at this tweet from Day. There are no mistakes, only lessons. So when I look at this and I interpret it and I say, well, this was a mistake. No, I'm going to learn something from this, right? Because we inverse this, but you need to be very careful not to front run the highest time frame gap. And I did that. I got punished for it. Sometimes you can get away with front running the highest time frame gap. So if there's like a really obvious reason we're ready to go run liquidity, sometimes you can do it. But for the most part, almost all the time, you don't want to take the lower time frame inversion. And I got punished for it. And so the other thing I will say, guys, about this that is interesting is even if this 15-minute had inversed, something you should know is we would need to close above this. If you guys don't know what this is a volume imbalance. And if we don't close above this, then we technically don't inverse this gap. So that's something to consider because this is basically part of the fair value gap. So you really do want to see that volume imbalance get closed above. So it's just something to note. But the third reason, right? The third and maybe the biggest reason why this 5-minute inversion fails to go up to these low resistance highs is, check this out. Sweep. Clear break of structure. And then retracement into a fair value gap. At around equilibrium. So if you guys don't know what this is, right, if you get a liquidity sweep, a break of structure with displacement, and a retrace into a fair value gap, this is the 2022 model. And so you can see that we push up into this 2022 gap, and then from there we aggressively displace towards these low resistance lows. So we need to be extremely careful that when we take a lower time frame inversion, have we got a 50? See, this was not only a 5-minute 2022 model, but you can see this was also a sweep, 15-minute break of structure, and a 15-minute gap that I was going against, right? And so this 15-minute gap aggressively expands us towards these low resistance lows. So I was very much against bias, against the trade, and it's important to pay attention at least a little bit to what are you going against? What are you going against the 2022 model? Are you going against the flow state model? Look at these little details because they do matter. And does the if this 5-minute inverse is okay, but this did the highest time frame gap inverse? No. So we got to be careful. Another thing is on the 15-minute, this something you can do that I've been thinking about lately, and I mean this could be just me just speculating, but it makes conceptual sense that you should be able to do this, right? This is a 15-minute sweep, break of structure. So what is this? That's a 15-minute 2022 fair value gap. Something that I've been thinking about that you can do is you can take a flow state. So if you don't know what that is, it's when you get a sweep and then a 1 minute. Oh, so this was a 15-minute gap. So we're looking for an aligned time frame change of state of delivery. So this is a 1 minute change of state of delivery. We retest that. And then you can see how aggressively we go lower off of this change of state of delivery. So I found that to be kind of cool. And if I measure out standard deviations of this, you can see we go right down to that 4th standard deviation perfectly. So it's kind of cool. You can since the 2022 model includes a fair value gap, right? Use that fair value gap. If it's like a 15-minute gap, you can use that to frame a 15-minute, 1 minute flow state model. So I don't know if that makes sense, but so on the 15-minute, we get a 15-minute sweep, a 15-minute break of structure, a 15-minute fair value gap, and then you can, on the lower time frame, use that 15-minute fair value gap as your higher time frame key level to frame a sell model, a 1 minute sell model. So 1 minute change state of delivery, stop above the high, and you can see we go right down to that 4th standard deviation. So that's just something that I've been thinking about lately that you could possibly do. And I don't know, clearly worked out pretty well in this situation. We go right to that 4th standard deviation. So anyway, from here on, the market chops around, and some people caught trades in here, but it's very hard to catch trades once the market is chopping around like this. It's just tough to trade in this. Typically, you want to wait for one side to get taken and then us to get that inversion out of it, like we saw Bob talk about. But there were some traders that caught some trades, so we will talk about that. First, we have Justin. So I'm going to briefly talk about Justin's trade. So once we get down into that consolidation, Justin takes a couple trades. We have 2 for 2, up 5.2K to start the week. Here, this is actually really interesting. I couldn't figure this out for the longest time until I watched the live stream that he did. And so you can see here in the live stream that if I scroll over, it was so fascinating because I didn't even know you could really do this, but I'm pretty sure he uses a 1 minute gap here. I don't know why it's not letting me go full screen. And so anyway, we're going to check out this part of the live stream real quick. And basically, it's like
Today, Bitcoin trades flat as the S&P 500 rises to another record.
Right,
Ripple says it'll withdraw its cross appeal against the SEC.
I can't get it to pull up right now, but we had this 1 minute gap, and I think he aligned the 1 minute with the 15 second. So that's how he got this. And then down here, he has a 15-minute fair value gap, and we get a 1 minute change of state delivery. So I'll talk about that one. That one made more sense to me. I didn't really understand the other one. But if I go back to the screen here, this one kind of made sense. We have a 15-minute fair value gap here. And then we get a 1 minute change of state of delivery. Now, in the live stream, it's actually kind of confusing because it looks like he doesn't actually enter right on the change of state of delivery, which just kind of seems wrong to me. He enters a little bit after we get the change of state of delivery, so maybe he was waiting for a reaction off of it. I would go pull up the live stream, but it kind of disappeared on me. So we're just gonna talk about it, right? So this was the trade he took. We have a 15-minute gap, and then we have a 1 minute change of state delivery, and yeah, we go up to target the first standard deviation and the second standard deviation. So it's a relatively straightforward trade, but for some reason, I don't know why, but for some reason he does enter once we get some kind of a reaction here. So I don't know why he did that, but for me, when I take these kinds of trades, I always just enter like this, target 1R and then target 2R. So 15-minute fair value gap, 1 minute change of state delivery, liquidity sweep. Anyway, but in general, it's very hard to trade this kind of price action. And Dodgy does find a trade in here. We'll talk about that. He says, put your money where your mouth is. And looks like it's this 2 minute inversion here. Or maybe it's a 1 minute inversion. But that happens right here, right? I mean, it's somewhat light bulb, right? Move down, move up. We get a close above this old gap, but it's not even really, honestly, I don't really understand it because it's not even really above that old fair value gap, at least on my chart. But to me, it makes sense on the 2 minute because on the 2 minute, it actually does look like we inverse that gap. You can see that that inverses here. So 2 minute makes a little bit more sense to me, but once again, like, I'm not sure this is one that I would personally take. It feels like you're entering a little higher in premium than at least I would want, but this is how Dodgy took it. He entered once this inversed, and then I think just targeted 1-to-1. So good job, Dodgy, and then you could go break even at this high or whatever. And then, there's something else I wanted to show you guys. I was talking to Jan about how you can take, like how to take the flow state trades correctly, and he says that you should always use the first change of state of delivery. I don't know if that's, from my backtesting, I've seen it work out where it's been not always been the first change of state of delivery, but I just want you to show you guys our conversation that we had so you guys are in the clear of what I've been talking to him about. So I asked him, I sent him this picture and I said, I'm looking at this 15-minute gap. We have 2 1-minute change of state deliveries. Which one would you use? And he says that he would use the top one. So let me know what you guys think, whether you guys would use the top one or the lower one. Either way, both of these end up working out. And we never actually hit stop loss because stop loss goes at the high of the highest wick here. And so both of these end up working out and deliver. But if I go back to the screen, we have this 15-minute gap. And then you can see both of these 1-minute change state deliveries, we deliver lower off of them. If you measure out this, so this is kind of cool. You can see that first standard deviation gets hit, the second standard deviation gets hit, and the fourth standard deviation gets hit perfectly. If you measure it out like this, you can see we run down to this fourth standard deviation here. So both of them are their own trades, it seems like. But Jan says that you should do this first change of state delivery. So let me know what you guys think about that. But anyway, then lastly, I think I'm gonna skip to the afternoon because I think we talked about most of the stuff in here. In the afternoon, this was honestly like for the most part today was a day you don't really want to lose money on, right? Because it's just a very choppy day in general. But we do have this 15-minute for value gap. And I actually really did like this. Even though the rest of the day was really choppy, I liked this flow state. Where we get, if I pull this down here, we get SMT with this low. See that? And then you can see we get this 1 minute change of state of delivery. And look at how precise this ends up being. So yeah, 1 minute change state of delivery with SMT off the 15-minute gap. I mean, this is about as clean as you get. And so you just have to think about it in terms of accumulation, manipulation, distribution. All day, we're just accumulating. This entire thing is a giant accumulation range. So when we get down below these lows, oh, you can't see my screen. All day, price is accumulating. This is an entire accumulation range. So when we get below these lows, we get SMT. Then we get that 1 minute change state delivery. And look how perfect we backtest this. It's like very, very cool how perfect we backtest it. And then we continue up towards these highs up here, these low resistance highs here, these low resistance highs here, and look how perfectly we go up to that 4th standard deviation. So that was a really nice trade. But yeah, for the most part, guys, it was really hard to trade today. I think for the most part, besides this trade and I guess also that 5-minute inversion, it'd be like it's hard to find trades within this, so just want to be defensive on days like today. But yeah, pretty cool how we did go perfectly up to that 4th standard deviation here. You can see how perfect that was. So anyway, I think that about covers it. I don't want to make this too long. I feel like I've already kind of made this a little too long, but you know what? It's fine. And yeah, let me know if you guys are enjoying these and how I can make them better. I will see you guys in the next one. Peace out.